If you hold Tesla, Palantir, SoFi, or Nvidia, and you're concerned about tariffs and recession fears, I'm going to make a video on the likely performance of these stocks going into April. I'm going to make a fast video on likely performance going forward. No masterclasses, no webinars, just research on these stocks. Let's get into it. Let's start off with Palantir stock. The stock's currently trading for $93.50. And Palantir has actually done very well during this heightened volatility. As you can see here, Palantir has actually bounced off of its low around $75, which was the bottom of its Bollinger Band, and now it's going up towards $100 per share. So looking at some of my research, on April 14th, NATO announced acquisition of Palantir's Maven Smart System NATO, an AI-enabled military platform designed to enhance battlefield operations. The system aims to improve intelligence fusion, targeting, and decision-making across NATO's allied command operations. The procurement process was notably swift, completed in just 6 months, with deployment expected within 30 days. Following the announcement, Palantir stock rose 5% and has gained approximately 30% in 2025. Palantir stock was up 5% after that announcement, and as you can see, year to date, the stock has basically went from a $75 stock in the beginning of the year to $93 per share. So Palantir's performance is 24%, and I think that this stock is going to continue to run in 2025. Palantir is collaborating with the U.S. Department of Government Efficiency, or DOGE, on a project to develop a unified mega API for the Internal Revenue Service, which I think is very much needed. And this project is going to make Palantir a lot of money. This initiative aims to centralize access to all IRS databases, potentially streamlining operations, but also raising concerns about data privacy and security. Guys, Palantir's Foundry system is expected to serve as a central interface for this system. This is a really big deal, which is projected to be complete within 30 days. On April 10th, Palantir announced enhancements to its Artificial Intelligence Platform, or AIP, and this includes bringing your own model, or BYOM, which allows customers to integrate their own large language models, or LLMs for short, into Palantir's ecosystem. So not only are they allowing customization from also seeing how others organize their LLMs, which is only going to give them more data, and Palantir is a data company. They also added AIP usage view tools, which provides administrators with detailed insights into LLM token and request usage, aiding in capacity and rate limit management. The biggest thing I'm looking for is Palantir plans to release its first quarter 2025 earnings on May 5th, 2025. Despite tariffs, despite the recession fears, I am very bullish on Palantir because, as you can see, it hasn't really weighed on the stock much this year. Now look, we saw a very hard bounce from the $75 level, and that means 75 is a really strong support. In terms of resistance, we do see a little bit of resistance here around maybe $98 in the short term. But once earnings comes out, the support and the resistance is not really going to matter, because after earnings, stocks typically jump up a lot or they jump down a lot. And this is because earnings make a whole new picture and they change future expectations significantly. I believe Palantir is going to have a blowout quarter, so I'm going to be investing money into Palantir ahead of earnings. I also really like this setup right now for selling puts because it looks like Palantir has found the bottom, has basically recovered very quickly. And you can actually see here, if I zoom in, you see that there was a couple of days of actually red volume, like there was a lot of selling pressure. However, it didn't really take the stock down. So all the people that were basically like, I'm not really a loyal Palantir, investor, looks like they gotten out, especially right here during this big fall on, April 4th. There has been a lot of selling pressure, and that still has not really kept Palantir stock much lower than where it's at right now. So I'm really bullish, and the setup that I see happening is you can easily get into Palantir at under $90 per share. Although $90 per share is only $4 lower than it's currently trading at, I think $90 per share is a really good entry point. So I'm very comfortable selling puts into earnings. All right, let's talk about Nvidia. This stock has had a lot of volatility. It's currently trading for just a little bit over $101. Now, this stock has been very choppy and volatile, with it going at basically $94 per share, falling all the way down there, seeing a pretty big rise to over 110, and now kind of stabilizing here at the $100 level. And I specifically, for transparency purposes, I have a lot of Nvidia. I have sold 100 sell puts at the 100 strike, and that's actually expiring today as I'm making this video. So that position was successful. You can see it's 11 cents. So I'll basically be selling more puts going forward on Nvidia because I think $100 is a very good price. You'll also notice I do have a poor man's covered call, which is what these two positions are right here. Now, in terms of support for Nvidia, I think the support level is easily at $95 per share. I mean, the stock has not been below $95 per share for long, maybe a couple of minutes, few hours. But essentially, you can see here that the stock has actually bounced up a lot on really heavy green volume here. And now we're seeing some selling pressures. And I think that's a lot because of concerns over China's revenue impact. The shares did take a pretty big hit, and the reason why is basically what Dan Ives calls the reason why shares have been under fire for a little bit is because Nvidia has been under some pressure from China. China only makes up about 10% of the revenue, but because they're essentially banning or creating a blockade on Nvidia selling chips in China, that's creating a really big issue for all their cash flow. And Dan Ives calls this a blockade. And I won't waste your time with the entire clip, but let me break it down what a blockade is. It's basically like a strategic shutdown of Nvidia's China business, and they're not going to be able to be selling AI chips, and that's lots of reasons for that. But essentially, this is going to be an issue for Nvidia's revenues. Now, Dan Ives uses the term blockade to describe the US government's exports restrictions on advanced chips to China, especially Nvidia's AI-focused chips like the A100, like the H100, and now even downgraded ones like 800. And these aren't just soft limitations. So if it was soft limitations, the stock, it would have maybe a couple percent reaction. But the reason why it's actually under some pressure is because the US is making it incredibly hard or even impossible for Nvidia to legally sell its most powerful chips to Chinese companies, including key buyers in AI, cloud computing, and data centers. So in Wall Street's eyes, this isn't just a temporary dip, it's like China is really completely cut off. Now, Nvidia used to make 20 to 25% of its data center revenue from China just a few quarters ago, and they've reduced their reliance on China significantly, which actually makes me really bullish because yes, there's recession fears and there's tariff concerns, but Nvidia is not as reliant on China as it was before. So now what do you do? I mean, do you buy into Nvidia or do you just hold your position? Do you run covered calls? I mean, what do you do? Well, with these new restrictions, Dan Ives says that the market is pricing in the idea that China will bring in a little to no revenue going forward, basically nearly zero. So it's already priced into the stock. As you guys know, the market prices things in extremely fast. So at this point, bad news is already priced in. And if you take a look at the stock, I mean, I really like it at the $100 level. That's why I've sold a ton of puts. And specifically, 100 puts at the 100 strike is $1 million. I invested. So I am ready to buy $1 million worth of Nvidia. So here's the $1 million question. So if Nvidia just lost one of its biggest buyers, and that's already priced in, is it time to buy? Or is this really more of a slow bleed for Nvidia going forward? For me personally, I've never been more excited to be an investor in Nvidia stock, especially because it's a lot cheaper than it was a couple of months ago. Obviously, no BS, I'm ready to buy $1 million worth of Nvidia. I'm a mega bull on Nvidia right now. By the way, I put together an ebook with all the exact option strategies that you should be using right now to capitalize on this volatility in the market, including on Nvidia stock, on Tesla stock, on Palantir stock. It's linked in the description below, and it's the same price as a lunch. So it's not a free masterclass or a free webinar like everyone else is doing, but it's an ebook with timeless strategies that you should be using right now. And these strategies are going to be good. And the ebook teaches both bearish and bullish strategies, as well as when to use these strategies. Super cheap with insane amounts of value. And if you're serious about growing your portfolio, I really think you should check it out. Now let's move into the next stock, which is going to be SoFi. SoFi, I currently have a position, which is a covered call position at $11. My covered call is up, but I'm down a lot on the stock. So I haven't been super right on the stock in the short term, but that doesn't really matter. I'm super bullish in the long term. And I think that SoFi is not just a fantastic business, it also has fantastic management. And there you go. It just popped up above $11 per share. The market cap is 12 billion, which is a really small market cap, which is actually a really good thing. If you're a smaller investor, you have a smaller portfolio, you're really just trying to scale any portfolio size, because SoFi at 12 billion has a chance to become 20 billion, 30 billion, and so on. It can grow its market cap rapidly as long as, of course, the business supports that growth. It's going to be really easy to make a lot of money on SoFi as long as they execute on what they're saying and what they're doing. I think it's a pretty easy bet because on April 29th at 8 a.m. Eastern, the company will release its financial results prior to the call. And if you take a look at previous performance in 2024, SoFi reported a 26% year-over-year revenue increase totaling $2.7 billion, and it achieved its first full year of profitability with an adjusted net income of $227 million, which is extremely good because revenues are going up and they had negative profit basically, but now they just came up above the zero water line. Right now they're breathing. and now they're ready to take off, which I'm really excited for. So 2025 guidance, the company projected GAAP earnings per share between 25 cents and 27 cents for the year, which is slightly below what Wall Street is expecting. Now, taking a look at membership growth, the company aims to add 2.8 million new members in 2025, building on its existing base over 10.1 million members. Now, the reason why this is so freaking good is because banking is a winner takes all environment, right? Once you have someone's wallet, you can basically take most of their wallet or their entire wallet. And SoFi is practicing something called the upsell model. And I've studied this in great detail for years and years, actually. So, what SoFi does is once they get a customer in the door for an APY product. I call it an APY product, which is like they give you an annual percentage return, which is a little bit more attractive than whatever you can get in CDs, stuff like that. They just make it attractive to come in the door. Once you're in the door, they deepen relationships and they create customer lifetime value. They deepen relationships with customers through multiple products. So what they do is SoFi enhances the overall value that they deliver for each customer, each member, by offering them more products. So this is genius because they're doing two things. They're getting a lot of customers. Obviously, 2.8 new members in 2025 is absolutely freaking wild, but they're also increasing the value of each customer. So oftentimes you don't need more customers. You need to sell more to the ones that you already have. But SoFi is doing both. So the biggest money is obviously made when you have upsells. So after the first sale is made, further on sales can account for literally 10x the value. So it's incredibly important to build trust and a deep relationship with customers. And that's exactly what SoFi is doing. And it's the same thing as like, look at Netflix. They don't upsell, right? You buy Netflix, you're good. You have a monthly subscription. Cool. But take a look at Apple. Guess who is worth 3 trillion? Okay. Apple has upsells. Netflix, not really. So SoFi is offering a full suite of financial products, loans, investing, banking, insurance, and they do it all under one app. So once you're in the door, you're going to be upsold a lot. They're also using data-driven personalization to recommend relevant services. So yeah, they're using AI, not surprising at all. So I'm really bullish on SoFi. I'm looking forward for SoFi to increase in value and to go back up to basically $15 to $20 per share. So real quick, Tesla has earnings and it's scheduled to report on Q1 2025 on April 22nd at 5:30 p.m. after market close Eastern time. And I mean, take a look at Tesla. Tesla has been basically range bound for some time, which actually makes it a really good candidate for the wheel strategy, selling puts and covered calls. It's been extremely volatile. The results have not been that good. I don't currently have Tesla, but I'm actively looking to get into it once I can free up a little bit more cash in my portfolio. I think if you are a Tesla investor, that this actually looks pretty good. In terms of stability, you can see that there's just tremendous support for the stock at like 226. It had a pretty big bounce actually on a lot of volume. Like you can see here, the volume was pretty much the biggest volume of the entire year. I mean, maybe back in November, but I mean, this year in 2025, I mean, there's been a lot of buying right here, which basically says that the stock is just really undervalued at under $230 per share. Tesla officially launched its operations in Saudi Arabia on April 10th, 2025, marking a significant step in its global expansion strategy. The company inaugurated its first showroom and service center in Riyadh, offering models like the Model 3, Model Y, and the Cybertruck. Additionally, Tesla plans to establish pop-up stores in Jeddah and Dammam. Now, Tesla's doing this to broaden their reach, and of course, there's a lot of competition in the market for electric vehicles. But overall, I actually think that Tesla is going to probably not have as much volatility going forward, and I'm bullish on them expanding because if you take a look at Saudi Arabia's vision for 2030 initiative, they basically are looking to create an economy that promotes sustainable energy solutions. And they have an ambitious goal of 30% of vehicles in Riyadh to be electric by 2030. So we'll see how that adapts, and I think right now it's a good time to hold Tesla and to invest more into Tesla as part of a regular dollar cost averaging strategy. Last stock I want to cover is going to be Archer. They had a capital raise. This was back in February. Archer actually raised approximately $300 million from leading institutional investors, including BlackRock. And this funding brings the company's total liquidity to around $1 billion. And that's strengthening their financial position for future developments. What I like about Archer is they continue to make significant strides in electric vehicle takeoff and landing, which is eVTOL sector. And despite some of the volatility, I'm pretty bullish on it, which is why I sold an $8 put. And it does expire today, 4/17, as I'm making this video. And I actually already got assigned on 5 contracts. You can see here I have negative 45 contracts, but I've already been assigned on 5 of the contracts. So I've already bought some today by assignment, and that's part of my plan. I'm looking forward to getting assigned the rest of these contracts, and then I will be continuing the wheel strategy and doing more covered calls. As I mentioned, I have a special promotion for my ebook, and that ebook contains all the option strategies that you can use in really any market environment. If you decide to purchase the ebook, there's also a little bit surprise after that. So I guess you'll find out, and if you know, you know. Make sure that you subscribe for more updates. I'm going to continue to update you on the stocks that I follow: Nvidia, SoFi, Tesla, Palantir, Archer. Catch you in the next one.